Hey everyone, thanks for coming to the session. Great topic today of spot ETFs and the institutionalization of Bitcoin, what that means for Bitcoin generally and particularly for the institutional space. My name's Dan O'Prey. I'm the Chief Product Officer at Bakkt, Bitcoin and crypto platform infrastructure company. For those of you who didn't see Fireside earlier today. But more importantly, we have Martin Bednall, the CEO of Jacobi Asset Management, and Cyril Sabbagh from Millennium Capital, two experts who have live ETFs in markets, who have super interesting backgrounds coming from the TradFi space and bringing crypto and Bitcoin in particular through ETFs to market. So Martin, I'd love to share some more of your background and what brought you here.
Thanks. Good afternoon, everybody. Martin Bednall, as Dan said, I'm the Chief Executive Officer of Jacobi Asset Management. My background is in TradFi, in asset management. I've worked for BlackRock, Barclays Global Investors. I worked for a smaller boutique ETF provider. At iShares, I was responsible for all the ETFs that iShares launched into the European market for around 8 years. So they all came through my team: equities, bonds, commodities. So I've got a long history in the ETF market. Cyril?
My name is Cyril Sabbagh. Well, I'm the managing director of Millennium Capital, and I'm also the president of another entity called Millennium Digital. I'm also coming from the traditional finance. I was a derivatives trader, and I also run an asset management company and a wealth management company. And I launched an ETF also on the Bitcoin.
Yeah, awesome. And yeah, I think as mentioned, you both have ETFs live in market today. We'd love to hear, I know you've taken slightly different approaches to that in terms of how those are structured. We'd love if you can share a little bit more about which the approach for each of your ETFs are and sort of why you took that approach.
Okay, so Jacobi Asset Management launched the first spot Bitcoin ETF in Europe. We listed it on Euronext Amsterdam, so here in Amsterdam, in August this year. So that was a 3-year journey, really, to get the product to market through the regulatory process, through the process of getting TradFi providers interested in working with us, through the issues that we had from FTX blow up and people not wanting then to work with us and those processes. So it's pure spot Bitcoin. For every dollar invested, every euro invested in the fund, we hold Bitcoin with Fidelity Digital Assets. The ticker on Amsterdam is Bitcoin, so we're pretty pleased with that ticker.
Nice.
Yeah.
Well, for me, the approach was different. We were looking for a product that would track the highest standard in terms of regulation in Europe. The highest standard is called UCITS. So when you go and see an institutional investor in Europe or an institutional asset manager and you want to sell your fund, the first question is asking you is it UCITS, the famous label. And so we tried to launch such an ETF, but the difficulty with such a regulation, the fund must be diversified and invested only in regulated financial instrument. The problem with the Bitcoin is if you invest only in the Bitcoin, it's not diversified, and it's not yet a financial regulated instrument. So we tried to find a solution to track the Bitcoin, but with regulated instruments. And so what we did, we found a mathematical way to track the Bitcoin but with equities. In fact, our ETF is investing in equities of the crypto ecosystem, equities that are listed in different regulated exchanges. So equities that belong to the, let's say, to the mining ecosystem, that are belonging to the crypto blockchain ecosystem also. Companies that have cryptos in their balance sheet, for example, MicroStrategy. And we invest in the 30 most correlated equities to the Bitcoin. And we weight them according to the correlation. And thanks to that, we managed to create a product that is UCITS, so that it belongs to the highest standard in terms of regulation, and was a very high correlation to the Bitcoin, and what we call the beta is close to 1 to the Bitcoin. And so why did we want to do that? It's because such a product is eligible to all regulated wrappers in Europe. So for example, in France, and I will finish with that, in France, you can invest our product in insurance life companies' wrappers, which is not possible with Bitcoin.
Very interesting. So yeah, I've got a spot ETF and an equities-based ETF which tracks highly correlated to spot as well. Both of those must have been very interesting to talk through with the regulators and approval process. Challenging, particularly being the first one in Europe. Was there anything? Are there any regulatory challenges you face now that you are live in terms of distribution, or is there anything that countries could have done better in order to support and make available these products?
It's a huge challenge with the regulators. It was a big challenge to get it launched. We spoke to many regulators in Europe. Some don't even want to take your call. Just don't want to talk about it. And others then are more sort of progressive in their thinking, realizing that digital assets, Bitcoin, is not going to go away. It's suffered enough sort of crises, and it's still here. And it's here to stay. So let's work. And then we found the Guernsey regulator to be the best there, to really work with us, and because the point is that if people are going to access the Bitcoin and other crypto assets, they should do it in the most safe and secure manner. And that's what we're providing through a regulated product with the Bitcoin held in storage, with Fidelity Digital Assets, with a regulated manager overseeing the operations. There's much more investor protection in that than there is somebody just going on an app on their phone and going through an exchange, and we've seen what issues that's caused. And then trying to take it around Europe. So Cyril's mentioned that the UCITS standard. Our fund isn't a UCITS fund because it just holds one single asset. But it's if you want Bitcoin exposure, then you want to buy Bitcoin, right? What it creates for us as a challenge is taking it around Europe and having other exchanges list the product. So, for the London Stock Exchange would like to have a segment for crypto ETFs, ETPs, but the FCA just won't even talk to them about it. So the UK regulator's not even talking to its national exchange because that's their stance at the moment. And we have it on in different markets. Some are better than others, right, in Europe, but it is a big challenge for us.
Have you seen any sort of changes in that over last year or so? Are they getting more friendly, or still just as tough to deal with?
There's been changes in it. Well, there's been so Hong Kong is getting more friendly. The Middle East, Dubai and Abu Dhabi, they're getting more friendly. So it's starting to happen in pockets, but not to any great scale. And I think a lot of regulators around the world are just waiting to see what the SEC do. And I think we'll touch on that topic in a bit.
Sure we will. And yes, so you took the equities route. Was it?
Yes, it was also a very difficult challenge. We started this project at the end of 2019. So you imagine it's a long time for the Bitcoin. And with such a project, we decided to knock at different doors. We knocked at the French regulator door, the Luxembourg one, and also the Irish one. And it was a very strange request for them because we are the world's first UCITS ETF. And so the Luxembourg regulator told us, well, no crypto at all, sorry. If you see now what they are doing, it's very interesting to see that at the end of 2019 they didn't want to hear about it. The Irish, it was different. They said, okay, let us think about it, and it took us 6 months to have an answer. But the French regulator at the end had quite a pragmatic view. They said, okay, you are investing in equities that are listed in regulated exchanges. Well, it can work. You have a mathematical solution. It follows the classic rules of ETFs. So normally there shouldn't be any problem. And, well, we managed to launch it, and we are now listed in France, in Italy, in Amsterdam. In June 2023, we have been listed in Amsterdam, and our ticker is BTC. So you can find it's close to the Bitcoin, to the ticker of Jacobi. So it's BTC also. And so yes, we managed at the end, but thanks to the pragmatic view of the French regulator.
Right, and I think that just really shows, right? So Cyril's fund is a fund that holds equity. It holds equity, securities, equity instruments, just like a load of other ETFs that are out there. So why does the regulator take a specific viewpoint because those companies are in the crypto ecosystem, right? It makes no sense. And you take it. We have challenges with regulators that shouldn't be there.
Yeah, I presume you wouldn't see the same thing in other industries. An equities ETF is an equities ETF.
Well, they have problems with the marijuana industry.
I was going to say maybe that one, but yeah. Cool. And yeah, you mentioned SEC and the US. A lot of conversations around Bitcoin spot ETFs in the US at the moment, highly anticipated. The SEC, the primary Securities and Exchange Commission regulator in the US, has thus far been very, very hesitant and reluctant to approve spot ETFs. There are cash futures-based ETFs, which are based on financially settled derivatives rather than actually touching Bitcoin or touching the underlying. But battles with Grayscale, trying to uplift their fund to become an ETF, suing the SEC. But now we see some large institutions like BlackRock submitting, and I think we chatted earlier about BlackRock's success rate of getting ETFs approved being pretty high. How are you seeing sort of larger institutions who are coming in? If you have any predictions on sort of spot approval in the US, but what we see as the impact on the wider market?
So I think there's about 14, 15 US spot Bitcoin ETF applications, and they keep getting kicked down the road. I think the mood music is changing now to that it's more and more likely that they'll be approved by the SEC. My view is that all the applications will be approved at the same time. So I think they're trying to corral them to be able to do that. In the ETF market, first mover advantage is huge. So if they just approved one and not the others, then that would gain a decent chunk of AUM, and when the others came, they just would be behind the curve, and so the SEC don't want to do that, and they've shown that in a couple of weeks ago. They approved some ETH future ETFs, and they approved them all together, and they all listed and launched on the same day. So I think the mood music is changing, and there's a couple of things in that. The Grayscale loss was big. It was a big loss for the SEC, and just the fact that BlackRock have put in an application. So BlackRock is obviously the whale in the asset management industry. They talk to the regulators and politicians constantly, and they wouldn't put an application in unless they were hearing, what they were hearing back was more positive than it's been in the past. So the next sort of deadline is January for a lot of the applications. I think we could see approval as early as January. It might be kicked down and then it goes to March. So sometime between those is when I think that's when it's likely to happen now.
Well, the story of the spot Bitcoin ETF is something that is really interesting and will change everything for me. First, a lot of people are asking me, well, I don't understand. There is already an ETF in the US. You can bet on the Bitcoin with an ETF, but it's based on the futures. Just quickly to understand why it is so difficult for the SEC to accept a spot Bitcoin ETF. The future, the future-based ETF is based on regulated instruments. The CME futures are regulated instruments. The thing is, for the moment, the spot Bitcoin is not traded on a regulated exchange. That's the difficulty for the SEC. That's why it's a real challenge, and that's why we are hearing the word surveillance sharing agreement, because they need to put it in place accept such an ETF. The fact that BlackRock wants to have such an ETF, and we know that BlackRock, I think they decided to launch 576 ETF, and they had only one no out of 576 requests. So we can understand that if they go there, they know that there is a big chance that they will have a yes. It will change a lot of things. In terms of institutional adoption, it will change a lot of things, and I can see it myself. We have a product that is UCITS compliant, which is the highest standard, and so it is eligible in all the wrappers in Europe. When I knock at the door at an institutional investor in France, for example, they're telling me, no, you understand, it is around the crypto. There is a psychological barrier that is very difficult to struggle and to fight. So, and they told me when we knew in June that BlackRock wanted to launch such an ETF, they said, now that there is BlackRock, yes, we may have a look. So it's very interesting in terms of institutional adoption, and also for the Bitcoin itself and for the move for the Bitcoin. You can imagine that BlackRock has such a power in terms of fund distribution. If there is a yes, we will have a huge amount of investment in this area. So yes, it's very important, and we need to be it's going to be really interesting, and the first half of 2024 is going to be really interesting for the institutional adoption and for the Bitcoin itself, because in terms of inflows on the Bitcoin, it's going to be huge.
Yeah, just building on the knock-on implications, I think if they do approve all of them at the same time, BlackRock will put an enormous amount of effort behind that distribution, because they'll want to make sure that their fund gets the AUM early, gets the momentum behind it, so it becomes the de facto spot Bitcoin ETF in the US. And that power of distribution and that effort will just help that momentum, and there's a sort of a wave effect from that. And the other aspect is, as you touched upon, is I think regulators and institutional investors, they are waiting for that decision before they get into it. So we have conversations with institutions, and I get reactions along the lines of, it needs to be more mainstream before we'll invest. And you say, well, what do you mean by more mainstream? And they're like, well, I don't know. I was like, well, if there was a US approved spot Bitcoin approved, is that a thing? Yeah, that would be one of the indicators, and it's that sort of mentality. So, the institutional money needs to come into the space. But I think that's going to help with the next leg up in terms of the price, and the big aspect in there is the US market and the US spot Bitcoin. So when they come, I think it's just going to be hugely positive for the market.
Extremely bullish, yeah, and that's interesting. Then you make the point not just on the distribution, but almost just the validation of having BlackRock, right? If BlackRock are doing this, then it must be serious, right? It's not just a bunch of crazy Bitcoiners. This is the largest asset manager in the world, and that gives institutions that air cover to participate, and regulators that thing to point to as well.
Yeah. And unfortunately, we talk about BlackRock a lot in this, and they sort of take away everyone's there, but they are the powers. But let's not forget there's Fidelity are there, Invesco are there, Franklin Templeton, and they're big asset managers themselves. So there's a lot of AUM in these organizations that, even if they just put a little bit and allocate a little bit across their funds and then push it with their investors, that's a huge amount of power behind it that hopefully should come soon.
It will help also the Bitcoin to be considered as a real asset class. And what is happening in 2023 for the Bitcoin is very interesting, because if you compare the performance of the Bitcoin with all the other asset class in 2023, the Bitcoin is overperforming all the other asset classes. That's the first point. The other interesting point is the correlation. If you analyze the correlation, the daily correlation of the Bitcoin with all classic asset classes, equities, but also, for example, gold or silver, the year-to-date correlation is around 20%. So there is also a need and demand for diversification in terms of portfolio. So putting some Bitcoin in such a portfolio is also a possibility to diversify it. And I can see it because we have a lot of wealth managers knocking at our door saying, okay, great, I have a new element, I have the possibility to put the asset class in the portfolio of my client. So it's all around institutional adoption, but also, retail adoption. So, the impact will be big.
There's quite a few studies now been done, and we've done one ourselves in terms of if you have run a diversified portfolio, what allocation should you put into Bitcoin that is beneficial to that portfolio from a diversification perspective and a risk perspective. So your risk reward payoff is improved by having 1%, 0.5%, 5%, whatever it is. And there's a whole bunch of studies been done. And the clear message from those studies is your allocation to Bitcoin should not be zero. I think
we'll agree on that.
Up to 5% is, it's additive, and the sweet spot seems to be about 1%. And this is for institutional investors we're talking about. But it absolutely should not be zero, and that's where they are at the moment. And
these are huge numbers, as you said earlier, right? So 1% is a lot of inflow.
Yeah, and they could they can access it today, right? They could do it themselves, invest directly themselves, or there are funds that people could use today, an instrument you could use today. I mean, we've got live funds, but we've done ETFs because ETFs are the instrument that not just retail but institutions use to get access. We make it easy for them. We make it easy for these institutions because for a big institution to invest in Bitcoin, it's a whole new custody network. It's a whole new trading partners. It's new trading software. There's a massive amount of due diligence that they need to do to get into the space. But we present them with products that take a lot of those hurdles away from them and make it nice and easy. And again, spot Bitcoin in the US would do it the same for the US managers. So we need institutions to come into this space. There's people I think probably don't want Bitcoin to become mainstream necessarily, but I think it just helps everybody if we get more and more participants active in Bitcoin.
Yeah, I was going to ask, for those in the audience who aren't in the institutional area or perhaps are retail Bitcoin investors who want to buy on exchange and withdraw to self-custody, as many do, what would be the impact to the wider space, to those, everyday normal people of your products, being widely adopted within the institutional world or the US spot ETF as well?
You can hold an ETF in a standard brokerage account, and the same that you buy any equity in or other ETFs if you invest in those. So whoever your platform, your broker is, you can buy an ETF in that account. You don't need a whole different ecosystem to manage that. And the assets are held one for one in cold storage. It's they're regulated. So if you are going to trust anybody, and I know there's people that won't want to trust anybody, but if you are, then it's the best the best product to get that access. It's a lot of responsibility to do self-storage, right? Self-custody.
Yep.
It really is. You might not want to trust anyone, but it's a lot of responsibility to put on yourself.
Well, yes, I would say that an ETF is a first step, and in particular for the Bitcoin. There is no technological barrier to come into this world when you invest in an ETF. As Martin said, you can invest it in any platform. So it is a first step for anybody to understand what is behind. And moreover, for us, there is also the possibility to understand this ecosystem because we are invested in the equities. And then it can, for what we are also telling our investors is they can invest in our ETF, but they can also invest in the Bitcoin. It's different. You're playing the ecosystem. It's like investing in the Amazon, Google, at the start of internet. in 2000 or 2001. And you can also invest in the technology itself, in the Bitcoin. So the ETF helps people and will to better understand this ecosystem, and then to play around that and to bet on this ecosystem also.
Absolutely, and unlocks a huge amount of potential for retail investors as well as the institutional flows as well. So thank you both so much for a super informative discussion. And the tickers were Bitcoin and BTC?
Yeah,
awesome.
Bitcoin.
Fantastic. Thank you so much. Please join me. Thank you.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.